Welcome friends. Today we are going to solve the practical problem on final accounts of not-for-profit concerns which are popularly known as charitable trust. Here on the screen you can see the question. It is related to the final accounts of charitable trust. Question says from the following receipts and payment account for the year ended 31st March 2021 and additional information of Raj Sport Club Mumbai, prepare income and expenditure account for the year ended 31st March 2021 and balance sheet as on that date. So here question asks us to prepare income and expenditure account and balance sheet because it is the part of final accounts of not for profit concerns, right? Here in the question, the receipts and payment account for the year ended 31st March 2021 is given. We know that receipts and payment account is basically the summary of cash book. All cash receipts are recorded on the debit side and all cash payments are recorded on the credit side, right? Along with this receipts and payment account we have additional information. In additional information, the assets and liabilities as on 1st April 2020 are given. It means opening balance of assets and liabilities is given. In second adjustment, subscription. In third, salaries. And in fourth, depreciation. So basically there are four adjustments, right? Now, as this is the final account, the main account includes income and expenditure account. This is the main account, and balance sheet, which is the statement, right? See friends, to solve this problem on final accounts of charitable trust, we have to follow a certain order so that all the points of receipts and payment account are recorded and all the items of adjustment are properly recorded in the final account, right? First, we have to prepare the format of income and expenditure account. Here on the screen, you can see the format of income and expenditure account. We have to prepare income and expenditure account in this format only. All expenditures are recorded on the debit side and all incomes are recorded on the credit sides. See friends, the income and expenditure account is prepared on the same lines as a profit and loss account because all expenses and losses are recorded on the debit side and all incomes and gains are recorded on the credit side. So this is the format of income and expenditure account. Now you can pause the video and prepare this format in your notebook. Along with the income and expenditure account, we have to prepare the balance sheet. So this is the format of balance sheet. On the left hand side, liabilities are recorded. On the right hand side, assets are recorded. So now pause the video and prepare this format of balance sheet in your notebook, right? Now friends, we have prepared the formats of income and expenditure account and balance sheet. Now we have to post the various items of receipts and payment account and adjustment in the final account. It means in the income and expenditure account and balance sheet. And we are going to record these items simultaneously in both income and expenditure account in balance sheet, right? Friends, as the not-for-profit concerns prepare only income and expenditure account, there are a lot of hidden adjustment in the final account. And before starting the solution to this final account, we must identify those hidden adjustment and give effects to those hidden adjustment, right? Now let us see how to find the hidden adjustment, right? As we have receipts and payment account for the year ended 31st March 2021. It means this is the receipts and payment account for current year. And our current year is 1st April 2020 to 31st March 2021. Right. Here in the additional information, the assets and liabilities as on 1st April 2020 are given. It means the opening balance of assets and liabilities is given. Now in the receipts and payment account, if you find a point related to this opening balance, it means there is a hidden adjustment on that. Now see, here building is given, so opening balance of building is 10 lakh, but in the receipts and payment account there is no word about the building, right? Now let us move on the next point. It is furniture. So opening balance of furniture is 2,40,000, and in the receipts and payment account on the payment side you can see that here is the point furniture 11,600. It means during the year we have purchased furniture of rupees 11,600, right? And we have already the opening balance of 2,40,000. It means we have to add this 11,600 in the opening balance, right? In this way we can find the hidden adjustment, and we can give effects to those hidden adjustment accordingly, right? So now let us start from the debit side of receipts and payment account. If there is hidden adjustment, and we will then we'll discuss about the credit side of receipts and payment account. On the debit side of receipts and payment account, the opening balance, that is two balance brought down, cash in hand and cash at bank, is given. See friends, the opening balance of cash in hand and opening balance of cash at bank is not recorded in the final accounts of current year, because basically this balance is related to the previous year, right? Now after opening balance, the point is donations. So here donations, we are going to treat these donations as income. Then subscriptions, so we know that subscription is also income. There is no hidden adjustment on this, right? Then rent is there. So see friends, here rent, and in bracket it is said that for 10 months. It means rent is received for 10 months only, right? Because this is debit side of receipts and payment account, and we know that on debit side of receipts and payment account, all cash receipts and all cash receipts are recorded. So the rent for 10 month is received, and the amount of rent for 10 month is 6,000. So here the rent for 2 months is outstanding, and accordingly we have to give effect for this, right? Then live membership fees is there. So now as we have identified one hidden adjustment, let us mark it. Okay, so here on the rent there is hidden adjustment, right? Then live membership fees are there. Generally see friends, if there is no information or no specific information on the live membership is, we treat it as a capital receipts, and we record these live membership fees in the balance sheet itself. Okay, so here membership fees, we have finished with live membership fees. Then on the credit side of receipts and payment account, salaries are given, then repairs of sports equipment, then insurance. See friends, all these are basically revenue expenditure, and we are going to record all those expenditure on the debit side of income and expenditure account. Then furniture is there. Okay, see, this is the furniture. As we have already discussed about that, this is the additional furniture purchased during the year. And here in the additional information, the opening balance of furniture is given. It means the we have to add this 11,600 in the opening balance, right? Similarly, next point is about the investment, and this investment of 20,000 is purchased during the year. So here in opening balance of 40,000, we have to add this 20,000, right? Next point is on the playground expenses, postage, then stationery. So again, all these are the revenue expenditure, and we are going to record all these revenue expenditure on the debit side of income and expenditure account. Then next point is sports equipments. So here additional sports equipments of 64,000 are purchased during the year, and here in the additional information, the opening balance of sports equipment is 80,000. It means we have to add this 64,000 in the opening balance, right? Then general expenses are there. Again, we are going to record these general expenses on the debit side of income and expenditure account. And then balance carried out, that is closing balance of cash in hand and cash at bank is given. So closing balance of cash and cash in hand and cash at bank is the basically balance on 31st March 2021, which is related to the current year. So that's why we are going to record this cash in hand and cash at bank on the asset side, right? Now here we have finished with payment side of receipts and payment account, or credit side of receipts and payment account, right? Now in additional information, building is there, furniture, sports equipment, investments are then, playground is there, and capital fund. So all opening assets and liabilities are there, right? See friends, first we have to record these opening assets and liabilities, right? And then we are going to solve the question. Before that, let us mark the further adjustment. So here in additional information, second adjustment is about the subscriptions. The adjustment says subscription includes rupees 1200 for 2019-20. So see, 2019-20, it is the previous year, so subscription of rupees 1200 is related to the previous year, so we have to subtract this from the subscription receipt because 1200 are related to the previous year. And adjustment further says and rupees 3200 for 2021-2022. So 2021-2022 is the next year, so these 3200 are related to the next year, and because of that we have to subtract these 3200 from the subscription received, right? Further, the same adjustment is on the second part of the adjustment is about the subscription. It says subscription of rupees 10,000. Subscription of rupees 10,000 are outstanding for current year. So current year subscription is outstanding. So we have to add this in the subscription because it is outstanding for current year, right? It is related to the current year. Okay. So basically there are three adjustments on the subscription, and accordingly we have to record amount of the subscription in the inner column and we have to keep space for this adjustment, right? Now let us move on the next adjustment, that is third adjustment. And adjustment says salaries of rupees 2400 are outstanding. So basically this adjustment is on the salaries are outstanding, uh, 2400, so we have to add the 2400 in the salaries because this is related to the current year. The third adjustment further says insurance of rupees 800 was prepaid. So insurance of 800 is prepaid, which is paid in advance. So prepaid insurance is there. So we have to mark this on the insurance because we have to subtract this 800 from the insurance because it is prepaid insurance, right? Okay, so here we have finished with third adjustment. Now let us move on the fourth adjustment. Fourth adjustment says depreciate building at 2%, furniture at 5%, and sports equipment at 10% on opening balance. Friends, this word is very important. We have to depreciate building, furniture, and sports equipment on opening balance. It means the balances which are given in the additional information here, right? So here we have to depreciate building. So there is adjustment. There is an adjustment on building, then again there is an adjustment on furniture and on sports equipment. It means on building there is one adjustment, on furniture there are two adjustment because additional furniture is purchased during the year, and we have to depreciate the furniture, and accordingly we have to keep the space for this adjustment while solving the question. Okay, so friends, here we have marked all the adjustments including the hidden adjustment. Now let us start the solution. As I have already said that uh, at the beginning or at the first, we have to record the opening balances of assets and liabilities if they are given in the question. Okay, and generally in every question on the final accounts of not for profit concerns, the opening balance of assets and liabilities are given. So make sure that at the beginning you record all the opening balances of assets and liabilities. Okay, so now here opening balance of building is 10 lakh. Okay, here building 10 lakh, so we have to record these on the asset side. Then next point is furniture. Okay, so as we have already prepared this format of balance sheet, now we know that building it is an asset and we are going to record this building on the asset side. Here you can see that we have recorded the balance of building in inner column because there is an adjustment on the building, right? Similarly, the next point is furniture, and the opening balance of furniture is 2,40,000. And here also we have recorded the amount of furniture in the uh, inner column, because there is an adjustment on furniture as well, right? After furniture, the opening balance of sports equipment and investments are given. So, okay, let us record the opening balance of sports equipment. It is 80,000, and opening balance of investment, it is 40,000, right? See friends, here we have recorded all these four assets in the inner column because there are adjustment on uh, all these four items, right? Now after investment, next is playground, and here you can see that there is no adjustment on playground, so we can record the amount of playground in outer column. Okay, so here playground 1 lakh rupees, right? After playground, next point is capital funds. So we know that capital fund on 1st April 2020, it means it is a opening capital, basically opening capital fund, and we record it on the liability side. So capital fund 14 lakh 95,600. Here we have recorded capital fund in the inner column because in capital fund we add surplus. If there is surplus, we have to add it in capital fund. If there is deficit, we have to subtract it from the capital fund, right? Okay. Next, uh, see friends, here we have recorded all assets and liabilities, or opening balance of assets and liabilities, right? Now after recording the opening assets and liabilities, we have to record the debit side of receipts and payment account. Okay, as I have already said that in final account you must follow a certain order. Okay, so that all points are recorded in the final account. So now we recorded the opening balance of assets and liabilities. Now we are going to record the debit side of receipts and payment account. So as we have already discussed about that, this two balance brought down, it is opening balance of cash in hand and cash at bank. This doesn't find place in the current year's final account. So now next point is donations. So we discussed that we are going to record these donations as income because these are general donation. If donations are specific donations, we have to record those donations on the liability side. But here the donations are just general donations. We are going to record these donations on the income side of income and expenditure account. Okay, so here by donations 55,200. As there is no adjustment on donations, we have recorded the amount of donations in the outer column, right? After donation, next point is subscriptions. So we have discussed that there are three adjustment on subscription. So we have to record the amount of subscription in the inner column, and amount of subscription is 62,400, and accordingly we have to keep space for three adjustment, right? So here subscription 62,400. Then after subscription, next point is rent for 10 months. So here we have discussed that there is hidden adjustment. Now let us first record the rent as it is income by rent, and we have recorded it in the inner column because there is a hidden adjustment. Okay, so see, here we have received rent for 10 months and amount received is 6,000. It means 6,000 divided by 10, it gives us 600. It means the amount of rent is 600 rupees per month, right? And as we have already received rent for 10 months, 2 months rent is outstanding. It means 6,000 for 1 month and 1,200 for 2 months. Okay, and we know that outstanding rent we have to add it in because uh, it is related to the current year. So 6,000 plus 1,200. The rent outstanding for 2 months 1,200. So 6,000 plus 1,200, 7,200 in the outer column. Right. Now we have to give the second effect for this outstanding rent for 2 months. So we must give second effect, and as this is outstanding income, it will be recorded on the asset side. So here on the asset side, outstanding rent for 2 months 1200, right? I hope the adjustment on rent, this hidden adjustment on rent is clear. See friends, here we have added 1200 in the amount of rent as an outstanding rent for 2 months, and we have recorded outstanding rent for 2 months on the asset side of balance sheet, right? Okay. Now let us move on the next point on the debit side of receipts and payment account. And next point is to light membership fees. So as I have already discussed about this, that if there is no specific information about the light membership fees, these are capitalized. It means these are recorded on the liability side as addition to the capital fund. Okay. So we have to capitalize the light membership fees. So here in the capital fund, we are going to add this life membership fees 5400, and the opening balance of capital fund is 14 lakh 95,600. So 14 lakh 95,600 plus 5400 is 15 lakh 1000, right? Let us move on the next item. Okay, so here we have finished with the debit side of receipts and payment account. We have recorded all the items of debit side of receipts and payment account. Now let us move on the credit side of receipts and payment account. On the credit side, first point is salaries 12,800. So we have mark here for salary because there is an adjustment on salary. So we are going to record the amount of salaries in the inner column. Here on the debit side of income and expenditure account, to salary 12,800, right? Let us move on the next point. Next point is repairs of sports equipment 3,320. See friends, repairs of sports equipment, repairs and maintenance of machinery, all these are basically revenue expenditure because they are recurring in nature. So we have to record those expenditures on the debit side of income and expenditure account. So here, to repairs of sports equipment 3,320. See friends, the amount of repairs of sports equipment is recorded on the outer side because there is no adjustment on this point. But on the salary, which is previous item of this debit side, salary, we have recorded amount in the inner column because there is an adjustment on the salary, right? In this way, we have to mark the adjustment and we have to keep the space for those adjustment and accordingly give the effects, right? Okay, let us move on the next point. So after salary and repairs of sports equipment, next point is insurance. Again, there is an adjustment on the insurance. Okay, amount of insurance is 2,000. So as there is an adjustment on insurance, we have to record it in the inner column. So here insurance 2,000, right? After insurance, next point is furniture. So we have already discussed about that. This is the additional furniture purchased during the year. So furniture 11,600. So we are going to add this 11,600 in the opening balance of furniture. So opening balance of furniture is 2,40,000 plus 11,600. So balance after addition, the balance is 2,51,600. Right? Okay. Now let us move on the next point. After furniture, next point is investment. Investment 20,000. So we have already discussed about this, that there is an opening balance of investment and the additional investment of 20,000 are purchased during the year. So we have to add this in the opening balance. So here opening balance of investment is 40,000 and additional 20,000 are purchased during the year. So the total balance of investment is 60,000. Now as there is no adjustment, further adjustment on investment, we can record the total in the outer column. Okay, so 40,000 plus 20,000, 60,000. Right. Let us move on the next point. After furniture and investment, next point is playground expenses. So we know that playground expenses are revenue expenditure and those are recorded on the debit side of income and expenditure account. So to playground expenditure. Here we have keep the place for insurance because there is an adjustment on the insurance. Right. So friends, see, in this way you have to organize the solution of your final account problem on the charitable trust, right? Okay, after playground expenditure, next is postage 1,800, and then next point is stationery 6,600. Both are revenue expenditure, and both we are going to record on the debit side of income and expenditure account. So first is postage 1,800, then stationery 6,600, right? Okay, here we have finished with these 2 points, postage and stationery. Next point is sports equipment. So here we have already discussed that sports equipments of rupees 64,000 are purchased during the year. So we have to add this 64,000 in the opening balance of the sports equipment. So opening balance of the sports equipment is 80,000. We have already recorded this in the balance sheet. So 80,000 plus 64,000, it gives us 1,44,000. So 1,44,000 is the amount of sports equipment, and still we have written it in the inner column because there is an adjustment on it. Okay, about the depreciation, right? Okay, so here we have recorded the sports equipment. Then next point is general expenses 9,280. So here general expenses we record it on the income and expenditure account, debit side of income and expenditure account. To general expenses 9,280. Right. Let us move on the next point. After general expenses, there is a balance carried down. It means it is a closing balance of cash in hand and cash at bank. See friends, here up till now we have recorded all the payments. Okay, because the credit side of receipts and payment account is related to the payments, cash payments. So here we have finished with all payment. Now we have to record the closing balance of cash in hand and cash at bank. So as this is the closing balance of cash in hand and cash at bank, it is recorded on the asset side. So here record cash in hand and then cash at bank. Okay, so cash in hand 5,200, cash at bank 20,000, right? See friends, here we have finished with the posting of receipts and payment account. It means we have posted all the items of receipts and payment account in the final account simultaneously. In the final account, it means we have recorded some items in the income and expenditure account, and we have recorded those items which are related to the balance sheet in the balance sheet, right? Okay, now let us move on the adjustments. Okay, so as at the beginning I have said you that you must follow a certain order so that all the points are posted in the final account, right? So in this way you can follow the order and record it. Here we have we recorded all the items of debit side first, then all the items of credit side of receipts and payment account, and now we are going to solve the adjustments. Okay, in additional information, first point is related to the opening balance of assets and liabilities. So we have already recorded this opening balance of assets and liabilities. Now next is uh, next adjustment, second adjustment, it is subscription includes 1,200 for 2019-20, right? So we know that subscription, this amount includes a subscription which is related to the previous year, that is for 2019-20. So we have to subtract it from the amount of subscription received. So 62,400 minus 1,200 gives us 61,200, right? Okay. So after the subscription which are related to the 2019-20, adjustment further says and rupees 3,200 for 2021-2022, which is related to the next year. So again we have to subtract this from the amount of subscription received because this subscription is related to the next year. It is not related to the current year. So less for 2021-2022, 3,200, 61,200 minus 3,200 gives us 58,000, right? So here we have finished with the first part of adjustment. Then next part of the adjustment says subscription of rupees 10,000 are outstanding for current year. It means current year subscription is outstanding for 10,000. It means we have to add this in the current year subscription, because we earned this subscription, but we haven't received this 10,000 rupees. It is possible that we will receive this 10,000 in the future. So here in the 58,000 we are going to add 10,000 as add outstanding subscription for current year 10,000. Okay, so 58,000 plus 10,000, it is 68,000. So friends, here we have given first effect to the all adjustments related to the subscription. As we have already discussed that there are three adjustment on subscription, and we have given a first effect to all those three adjustments. So here first adjustment, subscription for 2019-20, which was related to previous year, 1,200. So for this point there will be only one effect, because see, as these are related to the previous year, there is no place for this in current year's balance sheet, right? Now next point, this next subscription received for 2021-2022, it means subscription received for next year. So as we have received this subscription in advance, which is related to the next year, we have to record it on the liability side. Okay, as subscription received in advance. See here, subscription received in advance 3,200, right? Because it is related to the next year. Huh? Okay, so here from subscription we have subtracted 3,200 as received for next year, and we have given its second effects on the liability side. Again, here subscription for current years are outstanding. So outstanding subscription for current year 10,000. Here we have added this in the income. Okay, as we are going to receive this in the future, so outstanding subscription for current asset is recorded in the asset side, or second effect of this outstanding subscription for current year is given on the asset side as outstanding subscription for current year 10,000. Okay, so here on the asset side we recorded outstanding subscription for current year 10,000, right? Okay. So now I hope this second adjustment here is clear. The second adjustment is only on the subscription, but there are three adjustments. Okay. So we have done with this. Now let us move on the third adjustment. Third adjustment says salaries of rupees 2,400 are outstanding and insurance of rupees 800 was prepaid. Okay. So first part of the adjustment is related to the outstanding salary, which is 2,400. So here we have to add this 2,400 in the salary. So here we have recorded the salary in the inner column 12,800 plus outstanding salary 2,400, 12,800 plus 2,400, 15,200 in the outer column, right? This is the first effect of outstanding salary. As this is the expense which is outstanding, it is liability for us. So outstanding salary or outstanding expense, as salaries it is an expenses, so outstanding expenses is basically liability. So we have to record this 2,400 on the liability side as outstanding salaries. So here outstanding salaries 2,400, right? After this, let us move on the next point or next adjustment. Okay, here we have given two effects for outstanding salaries. Now next part of adjustment is says insurance of rupees 800 was prepaid. So prepaid insurance, again we have to subtract this from the insurance, because we have paid insurance in the advance. So here we have recorded insurance in the inner column 2,000 less prepaid insurance 800. So 2,000 less 800, 1,200 in our outer column, and we have to give the effect for this 800 in asset side, because we have paid insurance worth rupees 800 in advance. It means the expense is prepaid. So prepaid expense, it is an asset. So we have to record this prepaid insurance on the asset side as prepaid insurance 800 rupees, right? Friends, up till now, we have done with the third adjustment, that is salaries and insurance. Now, last adjustment is there, which is on the which is about the depreciation on assets. So we have to depreciate building at 2%, furniture at 5%, and sports equipment at 10%. Okay, so we have to depreciate building 2%, furniture 5%, and sports equipment at 10%. Now, let us give effect to this adjustment. So building, and see friends, I would like to show this. The adjustment itself says that depreciate building, furniture and sports equipment on opening balances, right? So we are going to depreciate building on this 10 lakh. So 2% on 10 lakh. Then furniture at 5%, it means 5% of 2 lakh 40,000, and 10% of sports equipment means 10% of 80,000, right? So here 2% we have to depreciate building at 2%. So 2% of 10 lakh is 20,000. So building 10 lakh minus 20,000, in outer column 9 lakh 80,000. Now we have to depreciate build furniture at 5%. Okay, so here opening balance of furniture is 2 lakh 40,000. 5% of 2 lakh 40,000 is 12,000. So 2 lakh 51,000, which is the total balance of furniture. 2 lakh 51,600 minus 12,000 is 2 lakh 39,600 in outer column. Okay, and amount of depreciation is 12,000. Friends, keep in mind that we have to give second effect to this depreciation, amount of depreciation on the debit side of income and expenditure account, right? So here we have now just depreciate the furniture at 12,000, which is uh, furniture at 5%, which is 12,000. Now we have to depreciate sports equipment at 10% on the opening balance, and opening balance of sports equipment is 80,000. 10% on 80,000 is 800. And as total balance of sports equipment is 1 lakh 44,000, 1 lakh 44,000 minus 8,000, the remaining balance is 1 lakh 36,000, right? So see friends, as at the beginning I told you that we have to identify the adjustment, and then accordingly we have to keep space for those adjustment. Okay, so here you must have observed that how adjust space is kept and how the adjustment are done. Okay, so now we have to give the second effect to all this amount of depreciation. So depreciation on building is 20,000, depreciation on furniture is 12,000, and depreciation on sport equipment is 8,000. So we are going to record all this on the debit side of income and expenditure account, as here. See, depreciation on building 20,000, depreciation on furniture 12,000, depreciation on sports equipment 8,000, right? Okay, so now we have finished with all the adjustment, including depreciation and its second effect. Now it's time for tally. Okay, now first we have to see whether there is surplus or deficit in income and expenditure account. As we have already discussed that income and expenditure account is like profit and loss account, right? If income is more, there will be profit, and if income is less, there will be loss. But we don't use this word. Instead of profit we use word surplus, and instead of loss we use word deficit for not for profit concerns, right? So here let us first uh, calculate the credit side, the or total the credit side, then total the debit side, find out which side is greater, and accordingly subtract the uh, smaller side, smaller amount from the greater amount. Okay, or smaller amount from the big amount. Okay, for that we have to take the calculator. Okay, here friends, I will show you the full procedure, total procedure of the calculation, how to calculate exactly these things. Okay, so here uh, let us calculate the credit side. So credit side is 55,200. First point, 55,200 plus 68,000 plus 68,000. 2 3 plus 7,200. 7,200. Okay. Now total is 1,30,400. So total of credit side is 1,30,400. Let us note down this total of credit side. It is 1,30,400. Friends, you should also note down the total of credit side. Okay. Now let us total the debit side. Okay. On debit side, 15,200 is the first point. 15,200 plus 3,320, 3,320 plus 1,200, 1,200, then plus 6,800, 6,800 plus 1,800 plus stationery 6,600 plus 9,280, 9,280 plus 20,000 is the depreciation. 20,000 plus 12,000, 12,000, 32,000 plus 8,000. So total amount of depreciation is 40,000. So we can add this 40,000 here directly, right? 40,000 plus 40,000, which is total amount of depreciation. Okay, so total addition of debit side is 84,200, and we have seen that the total of credit side is 1,30,400. It means credit side is greater than its debit side. Okay, so debit side is 84,200. So now first here record the total of credit side because it is more than its debit side. So total is 1,30,400. Right. Now we have to subtract this 1,30,400. Uh, no, we have to subtract the total of debit side from 1,30,400. The total of debit side is 84,200. So let us record on the debit side. Okay, so here 1,30,400 minus total of debit side is 84,000, 84,200. So 1,30,400 minus 84,200 gives us 46,200. So basically 46,200 is the surplus because income is greater than expenditure. Okay, so it is recorded on the debit side here. So first record the total, and now the amount of surplus to surplus 46,200, and it is known as excess of income over expenditure. And as this is surplus, it is added in the uh, capital fund. Okay, so we have to add this in the capital fund, right? So see here, capital fund. In capital fund, we have already added life membership fees. Life membership fees plus surplus 46,200. So 15 lakh 1,000 plus 46,200 gives us 15 lakh 47,200. Friends, here I would like to give one task. Just calculate the amount of balance sheet, if whether it is tallied or not, and let me know in the comment section. Okay, this is the homework for you. You have to just add the all the assets and liabilities, and you have to comment the amount of tally. Okay, whether balance sheet is tallied or not, let me know in the comment section. Thank you friends, thanks for watching. Make sure that you like the video and share it with your friends, and make sure that you have subscribed the channel, and for more videos, uh, keep subscribed, stay with me because I am going to make several videos on this topic and other topic as well. Thank you, thanks for watching.